We're tackling commission, fees, and compensation for the California real estate exam. First and foremost, all commissions in California are negotiable. There is no standard or fixed rate, and any suggestion otherwise is a major violation. For the exam, you must know that salespersons can only be paid by their own employing broker. A seller's broker can't pay a buyer's salesperson directly. The commission flows from the seller to the listing broker, who then shares it with the buyer's broker, and finally, each broker pays their respective salesperson. This flow of compensation is a frequent topic for exam questions. Another critical concept is procuring cause, which refers to the uninterrupted series of events that leads to a sale. It's not just about who showed the property first or who wrote the offer. The exam might present a scenario where a buyer works with agent A, then weeks later writes an offer with agent B. To determine who earned the commission, arbitrators would look at the entire chain of events to identify the procuring cause. Listing agreements contain important compensation clauses. A safety clause or protection clause allows a broker to earn a commission even after the listing expires if the property sells to a buyer the broker introduced during the listing period. For this to be enforceable, the broker must provide the seller with a written list of these prospective buyers within a specified time after the listing ends. Referral fees are another area the exam covers heavily. A California real estate licensee can pay a referral fee to another licensed broker for a referral. However, paying a referral fee to an unlicensed person for activities requiring a license is illegal. There is a narrow finder's fee exception, but it only applies to the simple act of an introduction and not to any involvement in the transaction itself. The federal law, RESPA, adds another layer, prohibiting kickbacks or referral fees for settlement services in federally related residential transactions, which includes most home loans. An exam question might test your understanding of the difference between a legal referral fee to another licensee versus an illegal kickback to a lender or title company. Now let's discuss some serious violations. Secret profit, also called undisclosed compensation, is when an agent makes an unauthorized financial gain from a transaction without the client's knowledge or consent. For example, if an agent coordinates repairs and gets a kickback from the contractor without disclosing it, that's an illegal secret profit. This is a breach of fiduciary duty and can lead to loss of license and other penalties. Advance fees are fees collected from a client before services are rendered, such as for special marketing. In California, these are highly regulated. A broker must submit their advance fee agreement and all related materials to the Department of Real Estate for approval at least 10 days before collecting the fee. The funds must be kept in a trust account and can only be used for the specified expenses. The exam will test your knowledge of this strict DRE approval process. Remember this mnemonic to avoid trouble. Disclose, disclose, disclose to keep your license close. Full disclosure of all compensation is the key. And always remember, every aspect of compensation, from the commission rate to referral fees, must be documented in a signed written agreement to be enforceable. As of January 1, 2025, a signed buyer-broker representation agreement is required before a buyer's agent can submit an offer. This agreement must clearly state the agent's compensation. For free practice questions, AI-powered explanations, and more exam prep tools, visit openexamprep.com. That's openexamprep, all one word, .com.